What's up, everyone? It's Scotty with Money Investing. Welcome on board for another Market Open live stream here. So if you guys can see me and hear me, just give me a thumbs up. Just want to make sure the audio and the video is working well. We did have the retail sales numbers come out this morning at around 8:30 a.m. Eastern, better than expected at 0.7% increase month over month. And of course, we did have a couple of earnings to also go over, but the yields are once again back under 4.3%. We did get up to as high as 4.27, and we do have the SPY slightly down 60 basis points. The NASDAQ QQQ is down about 40, and the Dow Jones is also down over 74 basis points at the moment. So once again, thank you so much for joining, everyone. MP3 Fitness Matt says you called it. SE dropped to 45. Yep, so SE is definitely dropping. C Limited down to that support. It's not surprising at all. Coming down to that inside this green rectangle where the support, the risk reward is actually going to be much favorable, far more favorable than it was yesterday, right? So down over 18, almost 19%. So, it's very, very normal for the stock price to drop even after a beat on EPS, but they did miss slightly on the revenue. So again, the risk reward definitely is a lot better. You can even lower that risk potential if it breaks below 45.30, right? So that's going to be that support, 45.30. Entry could be $46.50 or even down to as low as $46 with a potential target up to $54 to as much as $73 for a swing trade potential. Again, I don't expect everything to get bought up today, but definitely has a lot of potential and something to look into because they actually reported a positive earnings, right? So they are turning the corner towards profitable company, and they actually are going to be reporting EPS, positive free cash flow. So they are certainly turning the corner towards profitability, which is a big sign of long-term sustainable growth. Not to mention the company does have more cash than debt on the balance sheet as well. So let's take a look at Home Depot as well. But before we do that, I want to quickly go over the retail sales numbers here. But Home Depot is down slightly, about 0.5%. Beat on EPS, beat on revenue. Resistance is going to stay put at 334. And let's just quickly take a look at their numbers. So let's just come down here. So Home Depot keeps fiscal 23 outlook unchanged despite the second quarter beat. So beat on EPS, reporting $4.65 per share. That was a drop from year over year from $5.05, but came in ahead of expectations at $4.45. And revenue was down about 2%, just under $43 billion, but above the consensus of $42.2 billion. And comparable sales also did slid 2% each, but was less than the overall 3.8% decrease modeled by analysts. So beat on EPS, beat on revenue, beat on comparable sales, and guidance remains unchanged. For the company, they do expect earnings per share to drop by 7 to 13%, and outlook for sales and comparable sales to decline by 2 to 5%. And they also authorized a $15 billion share repurchase program. This should be like at the top of this article. They kind of bury it at the very bottom. If you don't really end up reading it, you don't really understand. 15 billion is actually a pretty big share repurchase program. And I think that's going to be over a course of, maybe a couple of years. But $328 definitely gives them the flexibility to buy a lot of shares back. And they have obviously been buying back a lot of shares in the last several years. So if you come over to the shares outstanding, it's gone from like 1.2 billion down to a little over $1 billion. So they have pretty much bought back about 20% of their share float in the last 7 years. So going into some of the numbers here. So retail sales increased 0.7% in July, better than expected as consumer spending is holding up. So 0.7% was that number. X vehicles month over month coming in at 1%, and X vehicles and gas coming in also at 1% on a month over month basis. Some of the upgrades and downgrades here. So NVIDIA reiterated as a buy by UBS at a $540 price target, upped from $475. Man, I really want to try what these guys are trying, like in terms of what they're drinking and smoking. Like I really want to try what they're on, right? It's Dawa reiterates Disney as a buy. We got Berkshire Hathaway also reiterate as a market perform from KBW. Palo Alto Networks as a buy from Deutsche. Then we got JP Morgan, Citi, and Bank of America reiterated as overweight from Wells Fargo. So pretty much reiterating some of the other peers in their own industry. Evercore reiterates ServiceNow as outperform, raising price target to $650. We got Barclays reiterating Walmart as overweight. Then we've got, Phillips 66 and Marathon Petroleum downgraded to neutral. Ford as overweight, and that's pretty much going to be it. Tesla also launching lower range Model X and Model S that are $10,000 cheaper. So both vehicles will cost $10,000 less than the regular model, according to Tesla's website. and the Model X standard range starts at just under 88,500 versus 98,490 for the Model X, and the Model S standard range starting price at just under 78,500 versus 88,490 for the Model S. So some newer vehicles, newer versions of those vehicles being launched at a lower price. Tesla at the moment pre-market I think slightly was down about 0.5%. Right now it's still down about 48 basis points, trading just under 239 at the moment. So Kevin says Nvidia. I think Kevin is drinking the same funny juice. It could be. No, but in all seriousness though, I mean, come on, 540. 540 is gonna put Nvidia like what level? From these levels, there's going to be another rally of close to like another 21%. That means the market cap's going to be $1.2 trillion on earnings of about $2 billion. Come on, 1,200 divided by 2. Let's just say that they do $10 billion this year, right? Let's just give them a significant earnings, right? Even the revenue is not going to be that much, but let's just go ahead and do it 4.3 billion for last year. Let's just say that they do 10 billion this year, so 1,200 divided by 10, 120 times earnings. Like, guys, come on. But no, definitely congratulations, for anyone who's been able to take advantage of the significant rally that we've seen for Nvidia. Cheers to him, though. I wish I had Kevin's position in Nvidia. Yeah, that's true. So time to buy Tesla, SMCI, and PayPal, Ben says. So, yep. So SMCI, maybe not so much. I mean, you definitely got to be careful here because SMCI has rallied quite a bit. Tesla also, not really close to our fair value yet, although you could argue that technically speaking, it is trading at a pretty strong support. And then PayPal, I do fully agree. I did a video on PayPal earlier, yesterday, going over the new CEO, Alex Chriss, and going over the entire summary of where he's coming from, what he's done at Intuit, and basically breaking down where the focus needs to be for the company moving forward. So those videos you can definitely check out if you haven't already. NVIDIA on this upgrade up another 2% right now. Tristan, Walmart's fair value. Yes, I will be doing a video on Walmart very soon because they are going to be reporting earnings later this week. So Walmart reports on Thursday. So I'll definitely be doing a video on them very soon here, either before or after their earnings are released. But we'll calculate the fair value for this company as well very, very soon. It's pretty much trading at an all-time high right now at just under 160. So David, yes, Sea Limited, we talked about it very briefly before you joined in. I think it is down a little bit over 18.5%, so 46.30, it's where it's at. Support level right now at 45.30. Of course, we've got a much stronger support at $40. I'm going to be looking at put options on Sea Limited for selling put options, selling cash secured puts. Only because, like I said, it's a company that has more cash than debt, so can't go bankrupt. Consistently growing revenues and earnings. Earnings actually beat expectations. Revenue came slightly a bit of a miss, and they are turning the corner towards profitability, which, like I said, is very, very important for the company's longevity, right? For any company's longevity, and of course being able to sustain its position in the market, they need to be profitable. Otherwise, they're just a cash burning machine. So for Sea Limited, that's a big plus point. But at the same time, we have to understand that, okay, margins are still low because they are very much, at the end of the day, they are an e-commerce company, but they do have a entertainment and services and financial services sort of arm, which can add to more profits and more margins in the future. So for those reasons, support level is going to be at 45.30 from a swing trading perspective. Of course, you want to cut your losses if it does break down below that level. And of course, all the way down to $40. But I'll be looking at maybe selling some CSPs at $40 strikes. I'll be looking at what the premiums are like. And if it's anything over, 2 to 3%, could even be higher, considering that it's going to have a very strong red day, at least at the open. Then we'll be looking at maybe selling some puts at those prices. I'm also looking at selling some puts on a Tesla here very soon. The moment it starts to, kind of dip below 225 and low 200s is when I will be looking at, 160s, 170s for put options for Tesla, because again, we're getting closer and closer to those prices. That's really where my intrinsic value ends up sitting at. So, Thomas, what was the green box for Tesla? Is that a buy zone? So it is really a strong support zone. I don't expect Tesla to break down below 200. And you'll notice that the lower end of that green box is at $208. It's acted as a very strong support in the past from back in May, June of last year. Then, once we broke down, that old support started acting as a resistance in February of this year, and then we broke out once again. So if we do end up coming back down to this level, the expectation is for us to find a lot of buyers, a lot of demand, and a lot of support at those prices in the 200s, low 200s. This is also a level where I would be, like I said, looking at maybe selling some puts. The moment it breaks below, 225, 220s, comes down to low 200s, I'll be looking at selling some puts for of course lower prices, lower strikes, out of the money puts, where I would be comfortable kind of buying more shares of Tesla, because that gives me the flexibility to not only have that margin of safety, but also generate some premiums and lower my cost basis at the same time, and allows me to be patient, right? I don't have to be chasing the stock, let the price come to you, something that we have talked about. And yeah, that's pretty much what the green rectangle represents. Let's see. So that's already covered. Walmart, like I said, I'll be going over that fair value before or after earnings. They report on Thursday. What do you expect from the markets today? So retail sales actually came in strong, right? So those numbers were pretty strong. That continues to show that the economy is still kind of grinding through. I mean, we're seeing the consumer spend, the spending is kind of holding up. So that's one piece of the puzzle. The other piece of the puzzle obviously is inflation, which did show signs of kind of ticking back higher, especially energy, food prices, shelter not really coming down. So we've got the Jackson Hole meeting later this month. August 24th, 25th is when Jerome Powell is going to be speaking in that Jackson Hole Economic Symposium, which obviously is going to be market moving event. So I don't want to make like an intraday prediction or anything, because I don't think that anyone can be consistent with those types of predictions, or heck, even for 6 months, 1 year, 2 year. Like, you can't really, be in that predictive mindset, because you can't be right consistently when you're making predictions. I think it's better to assess where we are, constantly evaluate the risk and reward, constantly take the temperature of the market, whether we're overvalued, undervalued, fairly valued, and just look for deals, right? Look for risk reward setups that favor you. And that's, markets and trading more specifically is very much reactive than being proactive and trying to predict, because you could be right once, you could be right twice, but you're not going to be right consistently over long periods. So it's much better to be reactive, trade the markets that you're in, not the markets that you want to be in, but instead just look at the risk reward and of course understand fair values, understand fundamentals, technicals. That's going to serve you better over the long term, at least in my opinion. Okay. So, please create a video on how to create that intrinsic value calculation sheet. Yes, so that video will be coming out soon. Actually, that it is part of our fundamental analysis course. I've kind of reserved it for all the course members only, and there's actually a lot more to it, right? So in that course, I also go over the discounted cash flows. I go over the earnings model, which I show you guys on most of my stock analysis videos. And there's also something called a weighted average intrinsic value, right? So the way we do that is, in our fundamental course, it's kind of covered, is that it's not just one model, right? In our stock analysis video, I basically go over one model, which is the discounted earnings model, where you're forecasting net income. By the way, yields are really dropping here, back under 4.2%. So definitely selling off pretty aggressively on that stronger retail sales numbers. But basically what we do is we forecast those net income for the next 5 years, 10 years, right? Depending on your time horizon. You discount all those earnings back to present value. You account for the shares outstanding and the share dilution over that time period. You account for obviously the net income itself, and you calculate a fair value, which is going to be the stock's fair value today based on that discount rate and the margin of safety. But of course, there's a discounted cash flow as well, which takes into account, a lot of different variables, right? Your cost of equity, your cost of debt, your free cash flows forecasted out, discounted back to present value, takes into account your net debt as well. And then you calculate a fair value using the DCF model. Then what you do is basically combine those two values together, and you apply a weighted average based on, what weighting, or depending on your conviction level for your DCF model versus your earnings model. If you want to give a 50-50% weighting, that's fine. If you want to give a 70-30, 60-40, you can decide that. And that's how you arrive at a I would say, more diversified intrinsic value. And then, of course, you can do the same thing with EBITDA. You can do the same thing with price to sales, different types of models. And then you can run what's called a football field chart to kind of better understand, where your actual intrinsic value ends up being and the variability of those intrinsic values. So again, a lot of that is discussed. Obviously, it's not a one video type of thing. It's not really something that I can go over in a live stream very quickly, because there's a lot of detail that goes into it, right? How to calculate your cost of equity, right? How to calculate your cost of debt. using, you know, all these different types of models like the CAPM and the DCF and everything. So anyway, that's for another video. That's for a separate topic, more fundamental. But anyway, Canada reported inflation today ticked up to 3.3% from 2.8 from June. That's a pretty significant uptick. Not gonna lie, I think a lot of it had to do with energy prices, if I'm not mistaken. So Tristan says, if I were to say I messed up and should have sold Tesla at 299 or at least a covered call, Caddy would say. Tristan, I don't understand your question. Can you kind of rephrase it a little bit? So if I were to say I messed up and should have sold Tesla at 299, or at least a covered call, Caddy would say what? Can you rephrase that question, please? Amit, thoughts on Realty Income, please? So I've already done several videos on Realty Income Corp. I think it's, in my opinion, at least one of the best, REITs out there. Yes, it's been dropping a little bit now, back under $58, but it's been consolidating sideways for a very long time, since 2021. But their product portfolio is absolutely incredible, with a very, very low vacancy rate, high occupancy rate, high rent collections, and of course, the company that actually do rent from them are some of the best ones out there, right? So Walgreens, 7-Eleven, we've got fitness companies, we've got retailers, big box retailers, even Home Depot, I think, is also part of their portfolio, companies that actually do rent from them. So no doubt about it, phenomenal business. What is wrong with my psychology? Getting your thoughts. Is it just me, or I just don't understand what Tristan's talking about? Tristan, can you rephrase the entire question? What is the question? Okay, Fitch threatened to downgrade the big banks. Yep, so I read that earlier today as well. We'll see. I mean, including JP Morgan, that's another bank that are probably going to downgrade eventually. And of course, that's going to put some maybe uncertainty in the banking sector. Lady says, when you see some profit, take some profit. Yeah, so it depends very much on the time horizon, and there's a lot that goes into it, right? Obviously, you can't just summarize it into one line that, oh, when you see profit, take profit, right? There's a lot that goes into it: taxes, liquidity needs, opportunity cost, risk tolerance, time horizon. There's a lot that you need to kind of assess before you can simply just hit the sell button and be like, okay, I see profit, I'm going to sell, right? So there's definitely a lot that goes into that type of analysis. Okay, I think Tristan is regretting not selling Tesla at 299. I think they missed selling Tesla at 299. Okay, so if that's the case, then yes, Tristan, I think the simple question you need to ask yourself is whether you were trading or investing in Tesla stock. For example, me, I was investing in Tesla stock, so I didn't really end up selling at 299. But of course, if you were trading that stock and you got in the low 200s, maybe sub 200, then 299 would have been a very, very nice resistance point, a target area where you could have taken profits off the table, right? So for example, Meta, like I wanted to de-risk a little bit. I did end up trimming some position yesterday. At $303. Now, it doesn't matter if it actually ends up selling lower, if it actually ends up pushing higher. I wanted to de-risk, and I'm able to take some profits off the table from this position because of my target allocation being a little bit higher than what I want it to be. So, so for those reasons, again, it's just a question of whether. Okay, so I'm disappointed that I didn't sell Tesla at 299, or at least sell a covered call, and I'm trying to learn and getting your thoughts. Okay, got it. So yes, again, trading versus investing, those are two completely different things with completely different objectives. So for me, for example, since I am investing in Tesla, I didn't get rid of my position at 299, but instead I was selling options, right? Selling call options to hedge my downside. And those options obviously are printing as the price is coming down. That's why we kind of encourage folks to look into selling puts when the market's going down, selling calls when the markets are going higher, because the premiums are going to be higher for those type of trades in that environment. You don't want to be selling puts when the market's going higher, because nobody is going to be buying puts when the markets are going higher, right? So you want to be selling them when the markets are going down. That's when the buyers are very eager to buy puts, and they're going to pay you a higher premium for you selling them. Same thing is true on the way up, right? You want to be selling calls because people are going to be excited, they're going to be buying calls, and you're going to be getting a lot of premiums. So Lisa says you come back with the Malcolm. What does that mean? So Boba, I actually did a video on PayPal earlier today, so definitely do check that out if you have the time. Found a growth stock, Caddy. What are your thoughts on ACMR? Abhishek, this better be good. ACMR, let's see. ACM research. All right, couple things. Pop quiz. What are the first two things we'll check when we're analyzing a stock for the very first time? A ticker symbol, a company that we have never looked at. What are the first two things I will look at? Pop quiz. All right, if you get this right, then a couple SoFi shares. Jason says logo. Yes, logo definitely. That's the most important thing. Without the logo, the company has no branding. Yes, so you got the one, market cap, absolutely, and volume. Yes, so Sandeep got both of them, market cap and volume, very, very important. That pretty much tells you a little bit about the company and the trading activity about this company. So ACM Research, we come down. Okay, so market cap, 827 million, average volume, 862,000 shares. So both of these are below our threshold, right? So we look for at least $1 billion market cap and at least 1 million in shares outstanding. Now, these are not like set in stone. So just because ACMR doesn't meet that threshold by 20%, meaning the market cap's 20% lower, volume's 20% lower, automatically we're going to rule it out. No. I mean, that's how companies grow, right? That's how you can expect this company to be a 10 bagger if it ends up being one, because it's going to go from $827 million to $8 billion. That's how it 10x's, right? So there's definitely opportunity, but we'll have to look into it more. So now if I scroll down, very, very nice, consistent revenue growth. It is a profitable company, so that's very good. If you come down to more financials, looks like it's trading at 13 times earnings, a little under 2 times sales. That automatically tells me what? Another pop quiz question. So if it's trading at under 2 times sales multiple, what is that going to tell me about the business without even looking at what they actually do? So Letty says, loving the new swag. Thank you for keeping the beard. So what does that tell me? So Sandeep says retail. You're close. You're close. It tells me a little bit about the business, that it is a very, very low margin business, right? Usually, there we go. Kevin got it, right? Low margins. So the company's definitely got low margins because it's trading at a very low sales multiple. And of course, price to earnings is also low, but that can be, considering the valuation is also cheaper. But bottom line is the margins are not going to be that strong. So if you come down here, gross margins are 47, under 48%. Net margins are just under 19%. So definitely is a hardware or retail type business. So let me just see what they actually do. So manufacture and sale of single water wet cleaning equipment. Interesting. Supplies process solutions that semiconductor manufacturers can use in numerous manufacturing steps to remove particles, contaminants, and other random defects. Okay, so far what we have learned about the company is that it's in the semiconductor space, specifically developing single wafer wet cleaning equipment. Very specific and mouthful. Lower valuation, consistently growing revenue and earnings. We do have the share count increasing, but not that much, 46 million to 60 million. And we've got pretty decent margins. Return on capital, equity, and assets, invested assets, is actually quite low. So the company definitely has more room for becoming more efficient because it's in the single digits. Current ratio, quick ratio is good. Let's take a look at their net debt. So what do we have here for the balance sheet? So they do have more cash than debt on the balance sheet. So Abhishek, I gotta give credit where credit is due. This is a fantastic business for us to look into more. Very few companies. Actually, looks like we have done some analysis on this. There is some technicals. Maybe they did a stock split. So if I did analyze this was way before 2022, because 2022 is when they actually did the stock split, and my analysis was over here. So they definitely, were trading, of course, in the tune of $109, $146, but they did a 3 to 4 1 stock split, and then of course selling off even further. So I'll add it to my watch list. There's not a lot of stocks below $1 billion market cap that I researched, but this is definitely going to be one of them. So, this is what I love about our community. Everyone can come up with some great ideas and great companies that we can look up together. We can do the research and see if it makes sense. And that's why there's always going to be, like with our community, there's going to be people who play devil's advocate. There's people who play both sides, for and against a particular company or a stock or investment, so that we can bounce off of each other's ideas and lower our risk as much as possible, right? So at the end of the day, we should know almost everything about the company in terms of risks, future potential, revenue model, like forecasted earnings, growth, intrinsic value, everything, all of it. So QLYS, so what's the ticker? It was ACMR. Don't worry, I'll do a video on them in more detail when the time comes. I'll do research and I'll do a video. QLYS. So let's take a look. What do we have? Market cap is 5.4. Volume's really low, like under 400,000. It's like a really illiquid company, but looks like very strong revenue and earnings growth here. We've got about 22% profit margins, not bad. Cloud security compliance solutions. So if it's a SaaS company, 22% margins are not going to cut it. They definitely need to have higher margins. Gross margins are still over 80%, but they're only netting 25%, meaning they're spending a lot of money on operating expenses, right? Which is their SG&A and research and development, which is okay, but eventually you would want to see higher margins, which they have been increasing. So they've gone from 19 to 25, 26%. And gross margins have also increased by 2 percentage points. So that's good. But of course, over the long term, I would want to see higher net margins as well. Strong current ratio, quick ratio, negative net debt. So that's another, man, you guys are coming out with some bangers here. So, but again, you see the difference, 10, almost 11 times sales. That tells me again, it's a higher, margin software type business, SaaS company, which is trading at almost 11 times sales and 47 times earnings, versus the one that we were just looking at earlier, trading at 2 times sales and a little under 14 times earnings. So, but nonetheless, I'll also add this one to our watch list, QYLS, I think was it, or QLYS. There we go. And I'll do videos on both of them, but the only thing is that it's not that liquid, right? So if you come over to the 5-minute chart, it's the trading activity is going to be, it's going to have a lot of gap ups and gap downs because of the lower volume. You guys have been putting in the work. If you guys are coming up with some really under $1 billion, close to $1 billion market cap companies that are profitable, consistently growing their revenues, that's incredible. I mean, I gotta give shout outs to you guys for coming up with these ideas. And that's how we find opportunities, right? That's how we find the next big ideas. Anyway, so markets are open now. We've got the S&P slightly down about 40 basis points. Yesterday was green. Today we're slightly down. We'll see if the markets get bought up here intraday, but Nasdaq's down 20. The Dow Jones definitely dropping a little bit more, 140 points. And we got the yields just back over 4.2%. So they've been a little bit more volatile today. Apple's still above 179. Tesla here flat. Nvidia on that upgrade, pushing higher, up over 2%. And of course, Microsoft, very, very flat. I mean, almost all tech stocks here, except for Nvidia, is flat. Nvidia is up over 2.3% on that upgrade at the moment. So Oscar actually did a video specifically on this. If you go over to the channel, you will see a video that I did earlier. So this right here, PayPal announces a new CEO 9 hours ago. This will basically go over everything you need to know, my thoughts, and where I want the company to be focusing on. Everything's going to be covered in this video. So you can definitely check that out if you have the time. And that will help you get a little bit of a better understanding on, what my perspective is. So Mark, Discover down big over the last 3 months, fair value territory for stable business. So Discover is not really, it's not really a bank. It is really a credit card payment processor type, very, very similar to, I would say, like a Visa or MasterCard or American Express, right? I would consider Discover very much as like American Express. I don't know, do they offer retail banking? Do they offer checking, savings account? You guys feel free to tell me that, but I'm pretty sure they're mostly a credit card processing company. Does say digital payment and payment services segments, focus on consumer banking. Okay, so they do have apparently some consumer banking arm, and the lending product specifically Discover branded credit cards issued to individuals on the Discover network, and other consumer banking products, including private loans. So mostly it is credit and lending is what I consider Discover to be. But okay, so they do have an online savings account, so they don't have really any physical presence apparently in the US. I'm assuming it's kind of like a very similar setup to like Ally Bank, which is like an online savings, and they kind of partner with other banks for the use of their ATMs or whatnot. But support level is going to be $88. So I haven't really actually done a video on Discover, so maybe that's something that I can do in the future. But 88.71, very strong support. You come over to the weekly chart, we've kind of bounced off of that level several times, and we've got that 200 simple moving average sitting roughly at $91. So this is, or it could be, the lowest risk reward profile for Discover from a swing trading perspective. Fundamentally, I'll have to do more research on the company, obviously, and take a look at what the revenue, earnings, and whatnot, everything looks like. But technically speaking, the 200 SMA, if not the $86 level support, very strong levels for Discover. If you run the volume by price profile here fairly quickly, the support ends up pretty much at around $95. That's the most traded price. And then second, third most traded price is going to be at $109. So it's coming down to a very nice risk reward setup for a swing trade. Let's check up on our friend C Limited here, down 24%. Oh, definitely selling off quite aggressively. So 40 bucks is going to be that next support level to watch. So very, very strong sell off here. And $40 is going to be that technical area and that support. Yeah, it also has great interest rate for online savings account. I think that's going to be for most of these online savings account, because online savings, is really just a way of saying that we don't have any overhead, right? So the fact that JP Morgan and Bank of America and Wells Fargo, like all these big brick and mortar banks, have so much overhead. They've got thousands of branches, all over the country and even in the world. A lot of the online banks, they don't have a lot of overhead, so they can pass on a lot of the savings and a lot of the rates over to the consumers. So that's why Ally and Discover and some of these banks are able to offer such high interest rates. So yeah, Discover have online banking. I'm a customer. But do they have any Discover specific ATMs? Like, I'm kind of curious now. Like, do you have to like go to partner ATMs like, B of A or JP Morgan to kind of, if you needed like cash, for example? Because that's how Ally Bank is operated, right? I'm pretty sure they don't have any specific Ally branded ATMs. But they do also offer very high interest rates on online savings. So Nisarga TMC is an interesting company to hold for the long term. So let's take a look. Yep, 380 million. Yeah, right. Losses after losses. I don't think it's worth looking into at the moment. All right, so we got the Dow Jones accelerating that sell-off here, down about 0.5%. We got the S&P down about 20 points or 44 basis points, and NASDAQ here also down about 23 basis points as well. Yeah, no ATMs. That's what I thought. That makes sense. Allpoint or Allpoint or MoneyPass networks for ATM. Got it. So yeah, I mean, this later this week we've got Target, Walmart, two big earnings coming out for retail. Other than that, from an economic calendar standpoint, we don't really have anything else scheduled other than jobless claims, housing starts, permits. The manufacturing index maybe is going to be important. Fed's balance sheet, FOMC minutes tomorrow. So those are some things that are still worth looking into later this week. And then I believe next week is when, so next week is the Jackson Hole Economic Symposium for the Fed. So, all right, let's see. August 24th through August 26th is when that's going to take place. And two words that are not great for the market last year, Jackson Hole. We'll see if this year is any different. I do expect it to be different. But yeah, we'll see. I mean, the Federal Reserve Bank of Kansas City's Economic Policy Symposium in Jackson Hole, Wyoming, is one of the longest standing central bank conferences in the world. And obviously, we'll have Jerome Powell talk during that symposium, August 24th through 26th. Yeah, finance. I've actually done videos on TLT and TMF. Definitely do check that out. We talked about it in one of our videos when we go over the debt levels. We specifically talked about Bill Ackman's position, short position on the bond market, more from a short-term perspective, but did a video on that, specifically going over TLT, TMF rates overall. I think last week. Or last, yeah, so last week definitely did that video. So PayPal in phase, giving up on some of those gains, down 1.5%, 1.6%. And Meta here slightly down, Tesla here slightly down. So very, very flat day for the market so far. Ben, C down more than 20%. Yep, so we talked about it just earlier today. NVIDIA VI. NVIDIA's trading like a penny stock. Timothy says, yeah. So, I mean, it got an upgrade today. That's why it's pushing higher at the moment, down up almost 3% right now. So there are a few more things that I'm considering. So when it comes to REITs, are REITs attractive now? Alpha, so they are very attractive, but some of the things that we haven't really touched on the channel at all are the topic of taxes. And you know, when it comes to dividend stocks, especially the ones that are in the U.S., of course, the U.S. is required to withhold about 30% of taxes when it comes to dividends. So you know, we want to structure a very, very tax efficient strategy when it comes to dividends, because 30% is pretty high, right? So those are the type of conversations and topics that we're going to discuss in a lot of our members only private videos moving forward. So that is something that we'll talk about. You guys can get excited about that in the future. Yeah, NVIDIA is really one insane stock. I'll look at Estee Lauder. What's the yeah, for this reason I hold my dividend stocks in a 401k, so that's good. That's smart. That's very smart. And that's a few more things, right? You want to be, say, like, you want to do most of your trading, for example, if you're trading options, if you're trading just swing trading or day trading or whatever, if you could, you want to be doing that in a Roth versus an actual normal brokerage account. In your normal brokerage account, I mean, it's smarter to be mostly investing for the long term, so you can take advantage of long-term capital gains and not really have to worry about short-term capital gains or wash sales or whatnot. So again, these are just good tax efficient practices where you want to be like focusing more on the long-term investing side in a regular taxable brokerage account. And if you are going to be trading, do so in maybe a Roth. Don't think you can trade in a 401k. I'm pretty sure you can. It's mostly going to be long-term as well, index funds, ETFs, or just, you know, dividends. David, finance, best tax advice could be shift to Dubai. Well, yeah, that too. I mean, if you're flexible in those ways, I'll actually be doing a video very soon on that. I'll go over everything. I'll go over. There's a lot that I need to discuss. It's just like I said, I'm still settling in. I'm still moving. I'm still looking for an apartment here. So I just actually went this afternoon. I was looking at a few different places, a few different areas. So there's a lot that's going on. So once I'm fully settled in, once I've kind of built my own studio and everything, then I will be going over a lot of different things in more detail. So I appreciate your guys' patience, and thank you for just, you know, giving me the time to kind of settle in here. Do you think that we will finish the year following the soft landing? So that's, again, you know, there's a lot of uncertainty around inflation, I think. Soft landing, in my opinion, only works if inflation's back down to the Fed's target, and we have a strong labor market and there is no recession, economic growth continues. But a lot of it depends on inflation, right? A lot of inflation depends on energy prices. So if energy prices, you know, move higher as they have been over the last 2 months, that's going to put upward pressure on inflation, which once again sort of reignites that fear that inflation is not truly defeated, right? It's going to be stagnating sideways, or it's going to be pushing back higher. So Nisarg, what would happen if the company which is publicly traded goes bankrupt? So, you know, you will see the stages of those bankruptcy filings and proceedings. I mean, the company's stock would be trading at lower and lower and lower and lower prices before it even gets to the point where the company files for Chapter 7 or Chapter 11. You know, one of them is just a restructuring, one of them is complete delisting. So, I mean, simple example I can give you is like our very own TTCF, right? So you'll notice that it's come down to now 13 cents per share, down 27%. But I think there's been a new listing, which is on the OTC market. So you can see that now the ticker symbol has changed to TTCFQ, and it's now at like 5 cents, right? So, and the market cap's like $4.6 million. So before the company even files for bankruptcy, you will see the stock price kind of dwindle down and just completely get delisted from the major exchanges, get listed on the OTC markets, and then of course the company announces they're filing for bankruptcy. That's why it's so important. Like the balance sheet analysis, we in fact have a separate sheet which I've shared with everyone that specifically goes over the balance sheet, right? So these are the things that we look for when we're looking at the balance sheet items, and these are all the ratios that I also focus on when I'm looking at different companies. So there's definitely, once you get these things down, then it's a lot easier to understand that, okay, the probability of this company going bankrupt is really close to zero, or what's that probability in percentage terms. So all that is discussed obviously in that balance sheet spreadsheet. So TIAA Retirement allows self-directed brokerage for trading ETFs. That's good to know. Again, there's a lot of tax efficient ways to do all this, and these are things that we haven't really talked about at all, right? Because taxes are also a pretty big element to overall trading and investing. So that's going to be it for today, everyone. Thank you so much for joining in. Hopefully this was, again, entertainment, value, insightful, informative, valuable. But nonetheless, markets are coming down a little bit. NASDAQ down about 0.5%, just 13,700, giving back on some of the gains from yesterday. We got the S&P down about 60 basis points. 4440 is the level that it needs to kind of hold up. If it breaks down, it breaks down. The Dow Jones is down over 230 points on that stronger retail numbers, which again kind of resurfaces that concern the Federal Reserve could be hawkish, right? Because a stronger retail number means stronger labor market, stronger jobs report, stronger economic conditions, and that once again, like I said, creates that uncertainty around interest rates and whether we're going to see another hike or not. So that's going to be it for today. Thank you so much for joining. I really appreciate it. Yes, Sandy says no option trading in 401k. That's what I figured. Only in Roth. And again, Roth can be used, as a way to kind of trade tax-free. So video on Alibaba. I'll see if I can do a video on Alibaba soon. Once I think they've already reported earnings. Yep. So I think we covered that last week. But right now they're selling right back down. So I'll see if I can do a video on Alibaba as well. But nonetheless, thank you so much for joining, everyone. I appreciate you all. Make sure that you drop a like, subscribe to the channel. Come on, 58 likes only. Can at least get up to over 100 likes. I would appreciate that very much. And again, thank you so much. Link to our Discord, Patreon is going to be down below if you're interested in joining. As always, happy investing. I'll see you all.